Your pick of the week this
Yeah.
week is
Occidental Petroleum, everybody.
tick
Occidental Petroleum.
OXY on the ticker. This is an oil refinery, something
Ye
like that.
yeah, yeah, Occidental Petroleum's got they play in, a bunch of the different realms, but they've got a lot of oil refineries going on. I'm not sure, what's gonna happen with the price of oil. You've got these tensions, uh, high in the Middle East, but you gotta remember that in the last decade or so, the US has positioned themselves as the, number 1 producer in the world of oil, right? Um, a lot of people don't realize that because of fracking technology and things like that, the Permian Basin and different places where traditional we thought that they were all but dried up, and we've gone back in the last 10 or 15 years, and now we're producing more oil than anyone. But you also got to remember that we trade on a world market. So even though we produce more oil than any other countries, if another country that's also a big oil producer, sends a hiccup into the world market, it's not like we close the doors and stop trading on the world market. Our oil goes up and down in price as well. But with that said, Occidental Petroleum has kind of been plateauing at this level of support around 50 bucks. Yes, they've got earnings coming around the corner. And so I was telling my program participants yesterday regarding premium trades, right? Premium trades are where we let the clock run out, right? And sometimes you don't want to be in a premium trade, if earnings is approaching. But I clarified that, and I want to clarify that for you guys on the line. You don't wanna be in just your initial covering position, right? Because that's basically a directional trade. And when earnings come, we often don't know what direction the stock is gonna go. We don't know what investors are going to do once they hear the information around earnings. Sometimes I often a lot of people say, "Well, if the earnings are good, the price will go up." Not necessarily. I've seen plenty of situations in my 25 years of watching the markets where a company reports better than stellar earnings and investors aren't happy about one little thing and they cause the price of the stock to go down, or where earnings have been, less than, exciting, but they were maybe a little bit more exciting than last quarter's earnings, and so investors, send the price. So it's not only what are they going to report during earnings, it's how are investors going to interpret and react to those earnings. It becomes quite complicated. And like Lee said, why don't we instead trade the more solid route? So when it comes to these premium trades, being only in the initial covering position can be kind of, six of one, half dozen the other, very risky. So either you want to be in all cash, which means, let's see, earnings and the earnings announcements are going to be on November 12th. So either we wait on the Occidental Petroleum trade until after November 12th, or if you do your step two, which is to apply that collar, right? That's where you sell the premium and buy the protection. If that collar's in place, your trade is going to automatically adjust. So it doesn't matter whether price all of a sudden shoots high or if price all of a sudden shoots low. All of your boundaries are now defined. And if you defined when you place that collar such that you create a risk-free trade where you can't lose money, then it doesn't matter what happens during earnings. So just as a reminder, either you're in all cash or you've got your step two, your collar and your protective option, your premium sold and your protective option bought. We call that the collar. You've got that step two in place, then you're fine weathering earnings. Nothing's going to happen to your trade that's not expected. So, with that said, we're approaching a bottom here, SIP. This would be a great time to buy some Occidental Petroleum. If you're going to buy Occidental Petroleum, you want to buy it in lots of 100. The other, possibility is instead of buying Occidental Petroleum, we could use a substitute option. The substitute option I've got my eye on, even though I've got in my notes, I put the wrong ticker symbol. It should have been OXY. It's the June of 2025 option, $35 call. So I would either do Occidental Petroleum. Let me see if I can quickly just I don't know if it's worth editing this in the text, but I'm either going to buy Occidental Petroleum or I'm going to buy the Occidental June 2025 $35 call. Those are going to be good things that swap. That's your initial covering position, and you do that at as low a price as you can. And then, like I said, earnings is coming. Let the price appreciate. We have all the way up until the day of earnings. Even if the price of the stock only goes up 50 cents, a dollar, or if it does something great, like goes up a couple dollars, apply your collar, get through earnings. Once you get through earnings, you could take your collar off or you could leave it until it expires. But that's kind of my strategy on Occidental Petroleum. But I can't pass up SIP this opportunity of buying it at this low. I'm going to wait for my signal to make sure that it confirms that it's a low. But right now it looks like we're at a low. So whatever you use to determine bottoms, whether it's order flow like Fausto talked to us about, whether it's indicators like I tend to use, wait for your signal to come in, buy your initial covering position, and then before earnings, place your collar. You'll be set for gold.